The Oklahoma City apartment market continues to perform very well thanks to a robust local economy, and yet this is one of the few places where apartment developers aren't rushing to build in spite of some attractive apartment fundamentals. Not yet, anyway. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Oklahoma City update. Not many markets outside of Texas have produced economic growth to the tune of what's happened in Oklahoma City over the past few years. Let's take a look at the job growth numbers before we dive into the apartment stats. You can see very solid, consistently impressive gains over the past 3 years. That consistency is really what you want to see in a recovery. Other markets, you see some momentum here and there, but they just aren't sustaining it. Oklahoma City, though, they're maintaining that momentum. Another 14,900 jobs added annually as of Q2, an expansion clip of 2.5%, very solid. And over the past 5 years, the job pool in Oklahoma City has expanded 5.4% thanks to that consistent momentum. That is the 8th best rate in the country over that time frame. And look at the 7 markets above Oklahoma City, all Lone Star State except just one, Nashville. Now let's take a look at what effect that those job growth numbers are having on the local apartment market. And we'll start with rent growth because that's where the effect is really most pronounced. Now I talked about the rarity of consistently strong momentum in the local economy that Oklahoma City has seen, and OKC has also shown consistently strong momentum on the pricing side. This chart shows year-over-year rent change in Oklahoma City versus the national average since Q1 of 2010. OKC is in red, the U.S. average in purple. And what you see is that Oklahoma City has outperformed the U.S. average consistently in 12 of the past 14 quarters. And over the past 3 years, annual rent growth in Oklahoma City has averaged 4.1% compared to an average nationally of 3.4%. And most recently, as of Q2 2013, rents were up 3.7% in Oklahoma City, and that was 60 basis points better than the national average. And now the occupancy story. Overall, occupancy here registered at 93.9%, down a hair in Q2, but still up 30 basis points year over year. Now, it's not a great number in the national picture, but it is above the long-term norms in this market. But let's look at the occupancy number broken out a little differently. 2 lines here. The red shows occupancy in apartments built since the year 2000, and the purple shows apartments built prior to 2000. Very, very tight rates at the top of the market, 96.7% as of Q2 2013 in apartments built since 2000. That's up 90 basis points year over year. In the older units, though, occupancy came at 93.2%, up just 20 basis points year over year. And the issue here is that Oklahoma City built a ton of apartments in the 70s and 80s. In the middle of the market's actually doing okay, but the real problem is that 70s segment, just not seeing a lot of momentum there, in part due to the large number of obsolete units from that segment. But clearly, there's strong demand at the top of the market. That is also the segment that's been generating the most rent growth over the past few years. And yet, despite all that, the construction numbers just haven't shown much momentum here. Despite all the construction activity in Texas, developers just aren't yet heading north to Oklahoma City. It's picked up only modestly, 1,143 units underway as of Q2, which would expand the inventory base here just 1.5%. Now, by comparison, the national average is 2.1%, meaning that when all of the apartments currently under construction in the U.S. are completed, the apartment stock in the country will expand by 2.1%, 60 basis points better than Oklahoma City. Now, obviously, construction tends to be more active in larger markets. Investors and developers just aren't as attracted to secondary markets like this one, but we are starting to see some construction dollars flowing to secondary markets, and it's probably just a matter of time before it happens here. For now, though, with so little construction and with such strong job growth, Oklahoma City looks primed to remain one of the nation's top secondary markets for rent growth. And that wraps us up for Oklahoma City. So until next time, for NPF Research and Apartment Market Dynamics, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.